much for waiting patiently. And now we're moving on towards our second panel discussion for the day on the theme, the digital glitter, leveraging technology and financial innovation. For this panel discussion, I request our esteemed panelists to kindly join us on stage. Mr. Sunil Ramrakhiani, Chief Business Officer, BSE Limited. Mr. Krishnan Iyer, Senior Vice President, NSE Limited. Mr. Ashok Gautam, MD and CEO, India International Bullion Exchange, IFSC Limited, IIBX. And Mr. Naveen, Mathur, Director, Commodities, Currencies and Gift City, Anand, Rathi Share and Stockbrokers Limited. Ladies and gentlemen, please put your hands together for our esteemed panelists. Can we have a big round of applause? And to moderate this discussion, I request our moderator, Mr. Jitin Makkar, Senior Vice President and Group Head, Corporate Ratings, ICRA Limited, to kindly join us on stage. We're looking forward to some great ideas and brilliant insights on the theme, the digital glitter, leveraging technology and financial innovation. Once again, a very warm welcome to all our panelists and our moderator. Over to you, sir. Thank you. And once again, I request our audience to kindly ask questions once the panel discussion gets over. And due to time constraint, we won't be able to take all the questions, but you can definitely submit your queries offline along with your feedback. Over to your moderator. Thank you.
So here we are just about to start the second panel discussion. The topic is digital glitter, leveraging technology and financial innovation, and I'm joined by quite a diverse panel here. Mr. Ashok Gautam, he's the MD and CEO of India International Bullion Exchange, to my immediate left. And then to my extreme left, Mr. Krishnan Iyer, he's the Senior Vice President at NSE. And then to my immediate right, Mr. Sunil Ramrakhiani, Chief Business Officer at BSE Limited. And then to my extreme right, Mr. Naveen Mathur, he is the Director, Commodities, Currencies and Gift City at Anand, Rathi Share and Stockbrokers Limited. So we have a different value chain seated here. I'll just start this discussion by posing the first question to Mr. Gautam, who is the MD and CEO of IIBX, as I mentioned. So, sir, the first question for you, as a topic, is that we would like to integrate India's bullion market with the global financial system, and it could mean multiple things operationally. It could mean including pricing benchmarks or delivery or vault standards. It could also mean cross-border settlement and participation by the global bullion banks. Now, my question is that where is India closest today in terms of meeting these, and where is the biggest gap that you see?
Thank you, Jitin, and I also want to thank ASSOCHAM for inviting me to this wonderfully organized conference. So, a very valid point, and in fact, this is where we come in. India International Bullion Exchange. When this was all conceived, the idea was, can we have an international bullion exchange where India, as you all know, around 800 tons of import of gold, which is very significant. If 3,000 or 3,500 is the annual mining production, then 800 tons is what India imports, 900 tons is what China imports. So almost more than 50% is by, or almost 50% by these two countries. So can India have a say in the pricing of the gold internationally? For that, there are two things. Essentially, there is a part of where is the physical trade which is there, which is centralized at an exchange. That is number one. Number two, also the price discovery happens through the futures exchange, futures trading. Now, some steps have been taken by IIBX in both the directions. So we have the spot contracts where the trading is done in US dollars. And they are all international price contracts. The idea is that if the large number of Indian buyers choose to come on exchange, and when I say buyers, then I also include the Indian banks to come on IIBX to import gold, then of course they will have a pricing power and they will be able to declare, and so the seller, they have to definitely sell their gold, and India is a very big market. So India will be able to take the price on their own bid rather than on somebody's offer. So that is one of the things with which this exchange was envisaged. Second thing which got added over a period of time was, can we offer hedging in terms of dollar for the price risk of gold? Now, for that, Reserve Bank of India has enabled that any entity in the domestic area having the gold price risk can hedge their gold price risk on IIBX. That is also permitted, though it has some operational issues. We have seen some domestic entities now coming and using the exchange for hedging. But ultimately, this will all have to be integrated with the domestic market. And that is what we are talking about. So what we have is, we have LBMA contracts, we have UAE good delivery contracts. We have also got the approval to launch a recycled gold contract to meet the niche requirements of anybody and everybody. Ultimately, what is going to happen when the EGR gets launched on domestic exchanges, we have plans to create a portability between BDR and EGR. So the gold gets imported in India, the BDR is there, the buyer buys the BDR, and when they want to trade it on domestic, they just, at the click of a button, give us instructions. We transfer the physical gold from our vault to the domestic exchange vault, and then the EGR is created in their domestic demat account, and then they can trade that EGR in the domestic. So it's a seamless integration of the global gold which is coming in. But ultimately, it has to be a two-way process. Right now, what we have talked about is only the import. Ultimately, the objective is to have unified India good delivery standards, which are in alignment with what OECD compliances are there, and are also at the same footing of what LBMA and UAE good delivery standards are. So for that, once that happens, then this particular gold, which is meeting the India good delivery standards, can also get traded on IIBX and also exported through the exchange. So it's a two-way trade. So any price discovery, when it has to happen, you must allow a free two-way trade, both to, for the spot side and both for the future side. On the future side also, little bit of constraint that what RBI says, only a hedging position can be taken. So essentially, when you go on any exchange and you try to have a price discovery, then it is not only hedging, but it is also taking naked position, speculative positions, and arbitrage positions. All those actually lead to the price discovery. So these are some of the things which we have done. We have tried to integrate the international gold business with the domestic gold business through India International Bullion Exchange. It's a very novel concept, novel in the sense now 4 years on, but we believe we still have a long way to go. When all the people who are present here, they say, yes, definitely they are on IIBX, then I will say, yes, we have succeeded. But these are my opening comments. Jitinji, I hope I have answered what you are trying to ask.
So just a specific follow-up to this, which is that you mentioned in the beginning about the 800 tons of gold imports that happen in India. So out of that, what proportion currently would be getting transacted at the IIBX?
So let's understand what is the component of this 800 tons and what is at present the addressable market for us. Out of this 800 tons, if we talk in a very, very round numbers, so 200 tons is a dore. So we do not have a dore contract. But that is one of the objectives. I hope that in next 12 to 15 months, we are working with the industry on both sides, the supplier and the buyer side, that we'll be also launching a dore contract, which will be the global first. So this is 200. So let's remove this 200. So this is remaining 600. Out of this 600, around 150 to 200 tons is the gold metal loan. Now, we do not have a gold metal loan contract as of now. Our regulator IFSC is talking to Reserve Bank of India. So that also takes away the 400 tons. So remaining out of that 400 tons, there is some gold which is for export of jewelry, which is again 100, 150. Right? So remaining 250. So out of remaining 250, we did 93 tons last year. So that is where we are already. So the point is, for exports also, we have got partial approvals, like all SEZ entities now meeting certain minimum criteria can import gold through us for the export of their jewelry. All advance authorization holders can take the gold at 0% duty through IIBX. That has also been enabled by DGFT as well as IFSCA. So there are various steps which have been taken. So it's a journey. See, the one thing which I tell you, what we have seen in my experience of last 4 years in dealing with the government and the regulators, they all are very forward-looking, very progressive, but they also know that they have to take incremental steps. And what they say as an institution, we must develop the processes, we must develop the confidence of the market that yes, this is something which we can give it to them and which brings economic value to them. Then they say, okay, incrementally, we have permitted this, we'll now permit this, we'll now permit this. It's not by a diktat that in Shanghai International Exchange, one day, one fine day, an order is given that all import which is happening in China must come through that Shanghai International Exchange. So that doesn't happen in India. It happens incrementally, and they want that let there be an acceptance of the market for this exchange, and that onus is also on us, that how do we make our processes so efficient, how do we make our turnaround times, how do we make the price discovery process, etc., so friendly that you find a compelling reason to come to us.
So in a sense, you're saying that through the IIBX, India has made some good progress. 250 is the addressable, 250 tons is the addressable market that you referred to, and out of that, almost 100 tons, you mentioned 95 tons, is something that is already getting transacted at the IIBX. So again, it's early days, yet I think we've made substantial progress, is perhaps the conclusion that I can draw from what you mentioned. Now, we heard Mr. Gautam's views. I'll just move to Mr. Sunil now. As I mentioned, he's a chief business officer at BSE. So the question to you is that India already has institution-grade infrastructure for gold via the ETF, exchange-traded funds, and also the electronic gold receipts, EGRs, as we call them. And on top of that, we have established exchange, trading, clearing, settlement capabilities as well. But as we also discussed during the day, that the size of the commodity trading is much smaller than the equity trading, and within the commodity trading pie, the size of gold trading or gold-linked products also is quite small currently. They lack the liquidity and depth. So is it just a question that as time will go by, we will achieve scale organically? Or do you think there are certain binding constraints that need to be addressed? And if there are constraints, what those constraints might be? Is it that the investor is not ready or not trusting the products currently as much? Or is it to do with cost economics? We discussed about the tax-related aspects in the first panel and earlier also. So again, your answer might be that it might just be a mix of everything, but in your assessment, what exactly is the binding constraint or constraints?
Good afternoon, everyone. So interesting, long questions. Maybe I'll try to dissect those questions into the multiple areas. So my request to everyone will be just be attentive when I'm trying to say about, because there's a lot of interlinkages which are happening between the markets now. I think first panel mentioned about the capital market overlap with the commodity markets. And interestingly, earlier there was CPI in the commodity markets, which also got the name change from commodity to the commodity and capital markets. So interesting, I started my journey in the commodity markets way back in 99, and I was a founding member with the exchange, one of the exchange, and interestingly set up the Bullion desk, founding member of the Bullion desk at ICRA. So I've seen the world changing from, I think Bhargav was rightly mentioning, I was a part along with him to file the first gold ETF when it was Rajan and Sanjeev of Benchmark. Benchmark got bought over by the Goldman. Goldman sold off to a different company. Now it's a part of the Nippon. So that gold beast what you guys trade is way back, history goes back to into 2002, 3 and kind of stuff. A lot of people are not visualizing how the industry got changed. Why I'm giving you the context at this stage is the way industry is changing in case of the capital markets and commodity markets is getting aligned in that case. And that's why we are talking about the interweaving of the same addressable customer. So when I say the same addressable customer is, I think from morning we are talking about the financialization of the gold or gold as investment product, gold, ease of buying and selling of gold. So there are multiple ways the way gold investment has started catching up in India. So I'm going back to the history in that case. There was Japan used to be a big example when we used to start building up a story on the gold accumulation plan. जो typically हम ज्वेलर्स के पास जाते हैं, तनिष्क भी चलाता है आपका 11 महीने का आप मेरे यहाँ पे डिपॉजिट करो और 4th month 12th month में मैं आपको गोल्ड दे दूंगा. So that gold accumulation plan, even at ICSA days, we started promoting that, went to RBI to get it done. But we could not make a breakthrough, but we are selling gold coins. We are the first one to launch the gold coins way back in 2004-5. Why I'm giving historical context to this is, at that time, addressable market was different. Now addressable market is becoming very, very different. Why I'm saying that is because from 1993 onwards or 1990 onwards, when the Indian capital market started opening up, it took 30 years for India to get 4 crore investors into capital market. 4 crore investors into capital markets took 30 years. Pre-COVID era, post-COVID era is very, very different. Pre-COVID era, 4 crore customers, 30 years. In last 5.5 years, 4 crores has gone to 14 crore unique investors. You can think about the way financialization of savings from banks to capital markets is coming in. Why I'm talking about this addressable customer is becoming so large now, that addressable customer wants the ease of buying or selling anything. If you can, I can see a lot of senior audience sitting over here. While initial days, while you try to open a broking account, it used to take a couple of weeks for you. I come from broking industry myself. It used to take a couple of weeks for us to open a broking account. Now it's happening in half an hour, not in half an hour, a couple of minutes. That is a kind of a technology stack which government of India has helped fintech industry to use that technology stack. And what is that technology stack? Is Aadhaar. Aapka bank account, Aadhaar se linked. Broking account, bank, Aadhaar se linked. Mutual fund account, Aadhaar se linked. Tax filing, Aadhaar se linked. So think about it, you've got such a strong technology stack. I'm giving answer in slightly lengthier fashion because you'll understand what is happening into the changing industry and why that ease of buying or selling of any kind of asset. I'll link you with the other assets also. So what is happening in the industry is everybody's become a technology driven. Just to give you some statistics about capital markets, we'll understand what is going to happen in commodity markets also. आज के दिन में रिटेल इन्वेस्टर जो रोज ट्रेड करता है कैपिटल मार्केट्स में 37% ऑफ डेली वॉल्यूम्स इन कैश मार्केट्स 1 लाख करोड़ के आसपास का ट्रेडिंग होता है रोज का. एक्सचेंज का 1 लाख करोड़ यानी कि आप लोग के लिए 2 लाख करोड़ का 37% is done by the retail. And out of this 37%, 80% of this is done by the mobile trading. Can you imagine? हम लोग सोचते थे कि यार स्क्रीन के सामने बैठ के ट्रेडिंग करना पड़ेगा, स्क्रीन के सामने बैठ के इन्वेस्टमेंट करना पड़ेगा. Now everybody got mobile. The guy, even Panwala, se lekar everybody is now becoming a mobile friendly and start looking at even the capital markets. So that 4 crores to 14 crores, what is happening is very interesting statistic है. ये कौन लोग हैं, कहाँ से उठ के आ रहे हैं, उनका एज प्रोफाइल क्या है, डेमोग्राफिक्स प्रोफाइल क्या है. Those are such important things for you to know so that you understand what is happening in capital markets. Are they coming for short term here? Are they going to remain in the markets for long time? Are they looking at only the stock to invest? Are they looking at a debt to invest? Are they looking at a gold to invest? Are they looking at a silver to invest? If they are looking to invest, what are the instruments available for them? So I'll give you some age profile of these new customers coming in. I told you crores new accounts got opened in last 5 years. But ये 10 crores है, लेकिन डीमैट अकाउंट्स कितने मालूम आपको? BSC में आज के दिन में 23 crore डीमैट accounts are registered. That means a same client be having multiple डीमैट accounts with multiple brokers. That is the way it works. But 14 crores is the addressable customer for us. Every month we are getting a 25 lakh new investors coming into the markets. It took 30 years for 4 crore. Every month we are getting 25 lakh new investors. Age profile, less than 30 years is 50% of the accounts. Between 30 and 40 years, less than 40 years, 78% of the new accounts which are getting opened in the market are less than 40 years. In our age bracket, typically, पहले हमारा क्या होता था, घर बन जाए, गाड़ी ले लें, बाद में investment करेंगे. Now things are changed. They don't want a house first, they want to invest, or they want to buy a car. The addressable size is becoming more younger and younger. I think the topic here, discussion about digital gold and the ETF market. Why I'm giving a background to this is, the addressable size is becoming so large, and they want opportunity to invest. They want everything on the mobile. I should not be going physically anywhere to open the account. पहले हम चेक देते थे, चेक को 4 दिन लगते ट्रांसफर होने में. Now with the technology stack, what I talked about it is happening in microseconds and seconds. You just transfer from a bank, it's available into your broking account. You just do the trade, invest into gold ETFs, silver ETFs, and relevant ETFs, what the investor does. So why I'm giving you this background is, what is happening is, exchanges have built up a very, very robust technology systems. Today morning, other exchange person Sriram was mentioning about 2,000 crores orders. BSC has got 1,800 crore order taking capacity in a day. We already touched 1,000 crore orders in a day. That means you require a very, very strong, robust technology and clearing system, what he mentioned. Those systems are so strong. With the risk management framework defined by the regulator, we have been very, very conservative in terms of the regulatory approach. Conservative helps in terms of this kind of volatile times. Our margining systems are more steeper than any of the margining system. That might be hindering some of the leverage trades in the market. But what is happening is, in these kind of volatile times when the gold and silver prices goes up by 8%, 10% a day and 15% falls in next day, your system should be so robust so that no default happens. So with the strong technology framework, strong, robust risk management framework, and with very, very strong regulator being there, that builds a very, very strong ecosystem to attract these kind of incremental 25 lakh new investors coming to market with the confidence what they want today, कि भाई मैं आज खरीद रहा हूँ, बेच रहा हूँ, मेरा पैसा वापस आना चाहिए. आज खरीद रहा हूँ, बेच रहा हूँ, मुझे नेक्स्ट डे पैसा मिलना चाहिए. That is the kind of a strong capital market foundation which is there of the Indian markets. Now you overlap with this with the gold and silver. Gold in particular was a point in context. I talked about 14 crore investors. We have been discussing in the morning from digital gold, which is the new, because these investors which are coming in, new age, what they used to do, they used to do games खेलते थे online आके. Government came and said, this is not for you at this stage. Online gaming was restricted and banned at that time. Crypto, another asset class. To them, they don't understand anything. New investors coming in, they just want to trade, invest into the asset class, whatever is moving up and down. Now they see the gold and silver prices move up and down. What is opportunity for them to do? Through my broking account, I can buy and sell gold and silver with the ease, with the gold ETFs which are coming in. I heard today, 1,80,000 crores worth of a gold is held in the vaults against ETFs. So you can see about the size which is getting into the financialization of the physical gold to the digital gold is the only word, but it's a dematerialized gold which is lying into with you. And your ETF is nothing but a dematerialized holding into your demat holding statement, which is held in that format. Let's compare that with the digital gold, which is another ease of access which is being provided. They don't want to open the account. I want to buy only 1 gram of gold. I don't want to buy 1 gram of gold. I want to invest only 100 rupees of money into the gold. That's micro. There's no grammage about that. It's about the amount what I want to invest into gold. That is also moving towards the digital gold kind of stuff. So recently, regulator realized with such a strong, robust infrastructure, with the strong technology infrastructure being already in place with the exchanges, why not revitalize the EGR, electronic gold receipt market. BSC had the permission to launch. We launched in October 2022 electronic gold receipts, but it could not go to next level because of the multiple ecosystem stuff. What Ashok ji and we were discussing, how we can revitalize that part. Regulator, after issuing the guidelines about the unregulated market, which are the digital platforms, how you can use the other markets. That's why regulator has been working very closely with the exchanges now to revitalize the EGR ecosystem. There are technical challenges which are being addressed by the exchanges along with the regulator to the ministry and reaching out to the how we can build the framework. The technical challenge largely revolves around the GST. I'll take only 1 minute to complete my answer. There's an interesting part is about the how the commodity gets converted into security. There's a very technical point into that. Whenever a depositor brings in the gold and deposits into the vault and converts into demat holding, that demat holding is called a security. Before that, it was called a commodity. And commodity comes under the GST. Security does not come under the GST. There's a technical point. So when you think about it, whenever buying and selling happens in the exchange on the EGR, there is no GST has to be paid on to that. It becomes a security. That means security transaction tax should be levied onto that. The person who has deposited the gold into the vault, he has already paid a GST. When he sells that EGR, which is he wants his GST back. But the guy who is buying, he does not need to pay a GST because the gold is lying within the vault. It's being traded n number of times, lakhs number of times. Who is going to pay a GST to that? So these are technical challenges which we are just trying to address. Hopefully, we should be able to come out very quickly solution onto that. But interesting part is this market with the large addressable market of 14 crore investors who want to buy and sell gold using this, proxy to them has been gold ETF. That something is already taken off in a big way. It's going to further catch up. With the interweaving of the ETF, derivatives market and EGR will multiply this market to manifold. That's the way we look at it.
Thanks, Sunilji. I think you said multiple things, but if I just have to pick up two among these. So you spoke about the importance of reducing transaction costs, and the entire digital stack in India has been helping the cause of reducing the transaction costs, reducing friction across the various markets, including equities, including commodities. So that's one important point that you made. And the other thing, not your words, but mine, which is that when there is any asset class which starts running ahead of itself, then the question perhaps should not be that how much more can it grow and what more could be done to further expand it. The question should be rather looked at from a risk lens that it's perhaps run too far and there could be risks lurking on the horizon. So perhaps that's another way to look at it. I'll just move to Mr. Krishnan Iyer. He's the Senior Vice President at the NSE. So the fact that digitization is happening and a lot of financialization is happening, so again from any exchange's perspective, there could also be a scope for stress and manipulation. So my question is that what are the most important signals that one can see where there could be a potential risk relating to the transacting in gold products on exchanges? Markets are becoming more digital. How do you see analytics and artificial intelligence strengthening real-time surveillance across domains of trading, cybersecurity, and system integrity?
First of all, I'd like to thank ASSOCHAM for having me here. Good afternoon to everybody. To answer your question, the signals or the events which more or less kind of result in a lot of volatility, I would say would be anything related to a geopolitical situation, some policy changes by the government, inflationary trends, ETF flows, the algo-related trades. So all these can actually kind of result in a lot of volatility. And this is where we kind of use a lot of AI in going through the amount of data. We've spoken about the number of orders, number of messages earlier too, and even Sunil referred to the same. So to go through this amount of data, we need to use a lot of technology. We need to use artificial intelligence, which helps us in, I would say, making sense out of nonsense, I would say. I mean, the kind of data that we have to deal with, we can only use AI to kind of filter and identify any kind of trends or trends related to market manipulation, order spoofing, or I would say, a few concentrated trades resulting in the price moving in a particular direction. So all these kind of things, we kind of use AI to identify, go through a massive amount of data. And also nowadays, we see a lot of algo-related trades. And these kind of structures, again, we need use a lot of ML, machine language, to identify, understand these structures. In fact, nowadays, we have technology to go through 17 layers of such structures to identify any kind of trend which is moving towards the market manipulation as such. And the second thing which you spoke about is the cybersecurity, which is very, very crucial. Again, these kind of technologies are used to have a real-time view on any kind of threat which can impact our system. So a lot of AI, a lot of analytics are being done on a real-time basis to make the markets more transparent, more secure, and more make it more trustworthy.
Sure. I think what you're trying to say is that a lot of data is already being analyzed, and therefore one could, for now, say that the investor is in safe hands. But then the rogue guys also have their own ways of finding cracks, and it's that Batman versus Joker analogy. Hopefully the Batman always keeps winning.
Yeah, so I mean, this is a continuous change, a continuous learning which we need to go through. I mean, no technology remains permanent. It has to evolve. It has to continuously evolve. So we need to kind of be one step ahead in terms of identifying such trends and kind of making the system more secure.
Sure, thank you. So I'll move to Mr. Naveen Mathur. He is the Director, Commodities, Currencies and Gift City at Anand, Rathi. So for this panel discussion, the last question to him, last but certainly not the least. So my question is that, that from the distribution front, we see a lot of demand drivers. We have ETFs, exchange-traded receipts, derivatives, app-based digital gold. What would be your views on the suitability of the present disclosure framework as an enabler of retail adoption, while also putting reins on mis-selling? And where do you think investors misunderstand the risks the most? Is it liquidity or pricing spread or redemption rules or something else?
Thank you very much. Thank you, Jitin, for this question. And I would like to thank ASSOCHAM for having me on the dais. Very relevant question as of this particular moment. I won't take much of the time. We are running with a paucity of time, so I won't take more than 10 minutes, if it's allowed to me. Now, what we are seeing is actually a clear transition of what gold used to mean to us, say 5-10 years back, and what it is today. Very apt topic and discussion at this particular point of time, and coming it at a very relevant point when I think in December, the transition of financialization and digital stuff has turned the AUM in a particular month of December, I think, the last December. The AUM collected in gold ETF was higher than the equity ETFs. It never has happened in the history. So that's how the things have changed. I think in that particular month, it was about 24,000 crores worth of ETF money, which landed up as an AUM for the various mutual funds who have the ETF schemes in India. And that has surpassed by around 200 crores from the equity ETFs, which came in the market in that particular month itself, the AUM on equity mutual funds. So there is a clear transition. The AUM holding, the numbers in perspective, Jitin, and for the audience, today, the AUM of the gold ETF is currently at around 1,25,000 crores. It is approximately 100% jump from approximately 69 to 70,000 crores, which we had in the last calendar year. So that's one part of the story. So the ease, the financialization, still gold holds the store of value, but it has become not the physical demand, it has changed into a digital and a financialization demand. The reasons of happening this is that globally, gold now is treated as an important financial asset in the world where we live in. So be the central banks, be the financial institutions, the global financial institutions, they hold gold in big amount these days. And their percentage in the total reserves too have gone up. So therefore, the investment perspective of gold has come into now versus what used to be. कि भाई शादी या ब्याह के लिए घर के में गोल्ड होना चाहिए, मैंने वो रखा हुआ है सेफ डिपॉजिट में. So an important asset class, and therefore the digitalization, the financialization of the product holds the key. At the same time, the question is pretty much relevant in terms of what the retail investors do. Now the retail investors and the HI investors are in the same category of using these particular products. I'm not saying digital gold, I'm talking about the ETF. The ETF product, I would say very easily and with minimum of paperwork, what my colleague Sunil has said earlier, it takes some minutes to open an account, and by virtue of having an account with a broker, you can buy ETFs just on a click of the button. So I think the digital framework has given that boon to the numbers of what the gold as an asset class has been looked at today. Now, in short, the institution and HNIs are on the ETFs. The retail and the millennia generation is into digital gold. And the long-term savers have been always on the sovereign gold bonds. Now, unfortunately, because of certain issues, what we discussed in the inaugural session too, the sovereign gold bond issuance are kind of on hold, or the government is not coming up with those issuance, but an excellent product which gives you the gold returns plus an alpha of around 2.5% on your holding. So this is how the categorization largely has been, in addition to what Sunil said in terms of the 80% mobile, 37% retail, etc., etc. Disclosure framework, Jitin. Is it adequate? No, it is not. As far as the ETFs are concerned, yes, they are SEBI regulated. They have the daily NAV disclosure. So you can see your portfolio in gold. How is it working? SGBs, yes, till the last series, we don't have the new series. It is RBI governed with a sovereign guarantee. But for the digital gold, there is no uniform regulatory oversight yet. So, and that's where a few years back, the RBI also has certain concerns with respect to the way the digital gold is sold out and missold to the people in general. So there is a gap, and for that, you need to fill in with respect to the custody, the price transparency, and the counterparty risk. To the last question of where do the investors misunderstand risk? The biggest gap is the liquidity risk. Now, ETFs can be liquid. On the exchanges, if you want to do anything on the gold, pretty much liquid. Even on the IIBX, the exchange in the GIFT IFSC, minus except the last year, although the IIBX has come into the perspective sometime in July 2022, phenomenal stuff. Means the qualified jewelers and the supplier, the exchange platform, means it's a new thing altogether to break the orthodox way of importing gold and using gold in India. So I would say that there are regulatory challenges with respect to certain products, but in wholesome generally, the gold market, except for the digital gold or the physical gold, which is not very transparent, you still are well regulated. In terms of the risks, as I said, the liquidity risk, the price spread, the redemption rules, and the counterparty risks would be something which the regulator and the government should look into to see the bullion market, particularly the gold, to the next level. Thank you.
So just to pick up what you said, you in fact mentioned about the various customer segments who have a proclivity of investing in ETF versus digital gold, and you laid down what that distinction is. One part of the asset class, ETF, is regulated. Digital gold isn't regulated, but then as the saying goes that let 1,000 flowers bloom, but again, you also need to control for the weeds. So on that note, I think...
Absolutely, Jitin.
Thank you very much to my panelists here. I think we had some good discussion, and hopefully the audience here also picked up some good tidbits from here, and please feel free to ask questions offline from the panelists. Thank you very much for your time.
Thank you. Thanks a lot.
Thank you so much. We thank all our panelists for this wonderful discussion, and of course our moderator for moderating the discussion so seamlessly. And now we request all our esteemed panelists and moderator to kindly come forward for the group photograph. Please, ladies and gentlemen, a big round of applause for this wonderful panel discussion on the theme, the digital glitter, leveraging technology and financial innovation. We thank all of you for your wonderful contribution to the session, and looking forward to the feedback from the experts and everybody sitting here. Thank you so much. Once again, thank you. Thank you so much. And now, ladies and gentlemen, we are moving towards our third panel discussion for the day. Please allow us some transition time so that we can make the necessary arrangements for the same. We appreciate your patience. Thank you so much.